Again, there is opportunity if we violate these highs to go to those highs, but not a lot of range at all. What you could look for is similar to the euro yen. Look for an exhaustion. I mean, we've ran all the way up about almost 100 pips now straight. You can see the RSI is massively overbought at high 80s, 90s. As we look at it fluctuate real time. Take your time. You can look for counter trend trades, right? We are in this area. We are in this zone right here of the rejection I drew out on the hourly. You can look for counter trend trades here where we get a selling signal. Look to trade it back down the previous structure. This is where we want to use volume again and some of our other tools. So we can use Fibonacci. We may have to adjust this, but Fibonacci, swing low to swing high. As of right now, we know that we have a 3D2. We can see that we have a 3D2 down at 183.17, 50% at 183.08, 618 at 183 even, right? Tight range here, we're on the 15. We can look at our volume and see if there's anything that stands out volume-wise, swing high to swing low. We can see that the significant volume pickup, right? It's pretty much even here, right? The significant volume pickup occurs down at 183.10, right? Which happens to be right at, structure shelf. Both of these inside structure shelves, right? So I would say a pretty decent level to look for, either 183.17 or 183.10. If you can look for a counter trend trading move from here down to there. Pound yen, the last one we looked at, was looking for a rejection here on the 15-minute. We got a nice push up into our resistance zone, little nice wick here, and then a close at the low, so a very strong bearish candle. A lower low, lower close would be a good confirmation of a continued move downward. I'm not sure it would offer the risk reward required to take this trade, but a secondary opportunity would be a double bottom. So let's kind of check this out and, work through this as if we were trading it. Go back to my day trading days, and I was operating on the 15. I use an ATR based stop, so I want to see what my ATR is based on our entry candle or the candle closest to our entry candle. My ATR is 11. So I want to take the high of this candle right here, which is 183.48. I want to add 11 to that, which is going to be 59. And that is where my stop loss would go. If I can grab this little thing right up here. We already know where our targets are at. So what I can do is I can take my Fibonacci retracement tool. I'm going to delete this one right here just to make it a little clearer for you. I'm going to take my Fibonacci retracement tool. I'm going to drag it from my stop loss to my projected target. And I know that because I personally require a 1-to-1 minimum risk reward. I know that if I trade anywhere below that 50% retracement, it is not going to give me a risk reward that's in my favor, right? So if this is my risk reward tool that I'm measuring out, boom, I know that if a trade comes below this level, it will be a negative risk reward. If a trade goes above this level, it will be a risk reward that is takeable. So what I do in this situation, if I'm looking for a lower low, lower close entry, for example, is I look at this and I know that I'm waiting for a lower low, lower close. That's my entry signal, but only if that entry signal comes above that 50% retracement. So the process is simple now, right? I wait. Now I wait. There's nothing I can do. I'm on a 15-minute candle. I got, 10 minutes left. I wait, double check stuff, get my trading log ready. And if price action gives me the signal I require, the location I require, I'm ready to take the trade. Boom, hit sell. Know where stops are going to be, know where targets are going to be. Boom, trade is set. No panic, no overreaction, no distress, right? Everything is planned out beforehand. If it does, let's say, close below that level, then I have two options. One, the trade is scrapped. Maybe this is my only way to enter, and I move on. I say, you know what? Well, didn't get it. Doesn't meet the rules, right? All the boxes aren't checked. Do not move on to execute trade, and I move on to the next opportunity. Or if I have a secondary reason for entry, I move to my secondary reason for entry. And my secondary reason for entry could be a double top. So if price comes down here, let's say we break and close below, lower low, lower close, but it's below that 50%. Dang it, can't take the trade. Well, now another opportunity would be if price action comes up for a secondary test. This is something known as a double top, right? Where we would have one top, two top. We spoke about divergence earlier. We can definitely use divergence as well. So looking at a CTS score, price action is at a level of minor structure, so 1 point. RSI massively overbought, another point. RSI divergence, assuming we get that, we typically in most cases would with a double top. And then a double top, we can put together a nice little CTS score of maybe 5 right here, which could be tradable. And then I remeasure my risk reward. It should be, we never know with double tops. Double tops could certainly close down here as well, but usually they'll close somewhere up in this area. If we have to adjust our stop loss again, although I would expect the ATR to remain the same, if not shrink even smaller because of the smaller range of movement, we make the adjustments and maybe we have a trading opportunity that works even more in our favor. So that is a good kind of follow-up on the pound yen. I know we started this analysis before the break. Now that we're actually getting signs, that's kind of the process of how you go about handling it. And this, again, stems off the conversation we had earlier about IPDE. I know it's boring. I know it's repetitive. I know I keep hammering you guys every single day you come in here with it. But this is how you become a consistently profitable trader, right? Consistency. And if you have a plan, if you have a process, and you follow that process day in and day out, you're going to analyze the market consistently. You are going to, hopefully, if you're good on your trading psychology, you're going to take the trades you're supposed to take consistently and pass over the trades that you're not supposed to take consistently. And if you do that, you're going to consistently exploit your edge in the market. And if you do that, you'll consistently make profit. It's when one of those little gears is messed up, that's when we run into trouble, where we do something messed up with analysis, maybe go on a time frame we're not supposed to be on, or a pair we're not supposed to be on, or when we mess up something psychologically, we take a trade because you've been watching this and like, I know I'm not supposed to take it, but I want action, so I'm going to take it anyway. Or when we move stops, move targets, those small mistakes are really what kill traders. It's very small, but they add up over time. So decent opportunity here on pound yen. Hopefully this provides another opportunity to see kind of the different ways that we go about trading it, or different approaches you can take to trading it.